disproportionate board.
Well,
What is
they're
their
not
fair
paying
share?
disproportionate. They are paying the same percent rate that a 60,000 earner is paying.
Thank you. Ms. Harkey?
Yeah, couple points, Ms. Skinner. You said that it doesn't tax income used for business expenses. I'm confused on that because if
Sorry, say again.
But we're not taxing income used for business expenses.
Correct.
If it's used as an expense and you have revenue, gross revenues, and then you have expenses, you pay tax on the net. So it wouldn't be included anyway. So I'm confused as to what you're talking about with that.
It does not tax income that is used for business expenses.
Well, we never do
That was in the
anyway.
analysis.
If you've got a business expense, that's written off. That's a cost of doing business. So I think there's a little confusion there. Also, on the property tax issue, the property tax was the one thing, Mr. Calderon, that kept us from going really over the edge, and it actually has our collections have decreased over the last few years. But it did keep things in line because, we doubled our general fund expenses from 98 to 2008. We doubled what we spent in the general fund. Had we had more money, we would have probably hit a harder crash. So I think that's one saving grace, and I think it's, Nuke and Prop 13 has come up many times, and I don't really think you'd want to take that one on in your district. So I think that we might want to try to reduce or make more steps between the 60 and the $500,000 earner or whatever. But I would suggest lowering their threshold, which would give them more money to spend, rather than trying to increase the other. We are losing people out of the state in the higher brackets. They have two houses. I hear it all the time. We're losing some of our lobbyists even are buying in Colorado now, believe it or not. No, they are. They're buying in Colorado, and they're living here 6 months and living there. It's just,
Right.
It is what it is. If you can afford to do that, you do it, and you don't pay taxes over there, and you claim that you're living here 6 months of the year. So,
Thank you. Well, I won't make a comment on that one. Mr. Bell?
I'd love to have the lobbyists all move to Colorado. I'll tell you that.
the CTA as well.
Wonderful.
The CTA as well.
That would be one of the biggest reforms we could possibly do here, and I feel like I've accomplished something.
But they're still working here, Mr. Bell. They're still working here.
So let's. I had a question. Could you address the issue in the staff report on the marriage penalty issue about? I think there was a question about typically our tax code
Right.
has separate rates for joint fires,
Right,
domestic
and,
partners.
Right. So, as is the case under our current tax structure, some couples will find their tax burden increases when they get married, but others will decrease. And this legislation doesn't change the way the current tax structure deals with married individuals.
Okay,
It doesn't.
So what I'm referring to, I think, is the $500,000. If it's a joint filed marriage, you're paying the same as somebody that's single that makes $500,000.
Lenny.
That is the case for the 1% surcharge for mental health, actually. And the way you deal with the way I believe the FTB suggested you deal with that question is that if you are married filing separately, you assess this on the joint income anyway, so you cannot avoid by filing separately the surcharge. If your income is $600,000 and you were to divide that, you would still pay the surcharge on that $600,000. So it does violate the tradition of the 250, 500, 500,
Right.
As did the mental health surcharge on the 1%, because one of the problems there is that you then are, when you push it down to 250,000, even though that's just single people, that is more like upper middle class incomes than the top 1%.
Well, that was one. That was kind of a little. I just got a little twitch on that one. I thought, well, okay, if two people make $250,000 each, and they're taxed at the higher rate, that's not fair compared to one person making $500,000. So I kind of I kind of, when I saw that, I sort of was concerned about
You
that.
can tweak that to make that joint income, although it is different from how we treat other taxpayers.
Yeah, and then the other question I have is in terms of the highest rate of taxation in California, what's the current lowest level of income for the highest rate? Where does the bottom start?
9.3 or now currently 9.55%. It's indexed every year, so it's somewhere around $95,000 or $100,000. Is it going up to 100 for joint? It's $45,000 or $50,000 for individuals, and that's where the top bracket for the general fund kicks.
So the top bracket starts at 45.
Roughly 50 and 100, or a little less. 50 single, 100 joint.
50 single and 100 joint. Okay, and so that.
It's all the way up through millions of dollars.
Now, that's another argument why we, as the cost of living gets higher, we should establish a readjustments in the brackets.
Well, we do index the brackets. So just most recently, it was at about 90,000, and I'm not sure it's around 95 or 100. But there were also along the lines of proposals to increase the top bracket and then move some brackets around so that you're not quite the person making 120,000 is not in the same bracket as the millionaire as currently is today.
And then there was a comment about other states. Do other states have the super rich bracket or $200,000 plus brackets?
Massachusetts has a flat rate, but then taxes capital gains and unearned income, so to speak, capital income at a much higher rate, which effectively is a tax on the super rich.
Okay. Okay, Mr. Chairman, thank you.
Thank you. Just wanted to close by just having a similar concern that Mr. Bell mentioned in regards to folks that are married and possibly getting hit on this. And so we will be referring this to suspense. We'll be taking it off later today. But I wanted to ask if you'd be willing to look at some amendments on a go-forward basis that would satisfy some of those questions.
Right. Since our intent is to affect incomes of 500 and above, 500,000 and above, we would be open to an amendment like that.
Okay, great. Thank you very much. Would you like to close?
Yes, thank you. So in closing, I want to be clear that this, unlike some of the other measures that we've talked about today, this measure would affect only 1% of tax filers in California. The 99% of all other Californians would not be affected whatsoever. And this increasing 1% on our top wealthiest 1% of California is very popular by the public. There's been a recent PPIC poll showing 62% of likely voters support this, and nationwide, independent voters, Republican voters, and Democratic voters support raising taxes only on those wealthiest among us. So that's the purpose of the bill, and I would respectfully request your aye vote when it comes off suspense.
Thank you very much. Appreciate it. We'll refer this item to suspense. We have two more items to hear before we get to our suspense. I saw Mr. Fuhr. Was he out? He was here. I may have stepped out. Mr. Chesborough. Item number 10, AB 1428.
I may jinx this by saying this, but hopefully this is much simpler than some of the other things you've been taking today. AB 1428 would allow individuals who suffered a disaster. Would you mind? No problem. No problem.
Sorry. Thank you, Wes. I appreciate that very much. Yeah. It has been one of those afternoons. Thank you for the deference, and Wes, thank you again very much. So this is a bill that, to my knowledge, has no opposition, and at other levels of government has brought together Republicans and Democrats. Boils down to this. Tax deductions are intended to reward or incentivize good behavior by business, income-producing, job-creating behavior by business. Punitive damages, by contrast, are penalties that a business must incur when it engages in malicious, oppressive, or fraudulent conduct. Literally in law, despicable conduct. There's an anomaly in our tax law that is not in state statute nor in federal statute. The anomaly is that when a business is required to pay punitive damages because of despicable conduct, state taxpayers subsidize it by giving that business a deduction under California law. There are two flaws with this. One is no one in the public deserves to have to compensate a business for engaging in despicable conduct, yet we subsidize them every time they pay a punitive damages award and claim it as a business expense. And second, allowing that deduction undermines the importance of punitive damages in the first place, because suddenly the business is not being penalized to the degree that a jury intended to for despicable conduct. This bill, very simple. The bill says that punitive damages should no longer be deductible as a business expense in California. Again, no statute has created the current rule. There's an IRS ruling from about 30 years ago that the feds and California have adhered to. It's a ruling that makes no sense. It was not prepared by anybody who's accountable then nor now. And I urge this committee to change our approach here in the state. And to be clear, in Congress, where this idea emerges, one of its leading champions is a very conservative Republican senator who has said this is the most outrageous section of American tax law. It is. It should change. We can change it here in California, and I urge an aye vote.
Good afternoon, members. Brian Augusta on behalf of the California Rural Legal Assistance Foundation. In this budget environment, we're making a lot of tough choices. This one, it seems to me, should be an easy one. It's against public policy to essentially reward what has otherwise been determined to be bad conduct with a credit on your income tax. And for those reasons, we think, given the tough situation that we're in, this is one that ought to yield, and we would urge the committee to pass this measure.
Thank you. Next witness.
Mr. Chair and members, Vanessa Kahina with the Western Center on Law and Poverty. We believe that AB 1276 fixes a pretty egregious loophole in tax code currently. Health and Human Services have borne over 50% of the brunt of the $12 billion in cuts that we took in the last budget cycle in March. As such, we support bills that close tax loopholes and increase revenue in California. We ask for your aye vote.
Thank you. Next witness.
Sarah Flux from the California Labor Federation in support of this bill. Not only is it good for our budget, but this tax deduction is something that undermines our laws and is undermining the deterrent effect that they're intended to have. Thank you.
Thank you. Next witness.
Mr. Chair, members, Christy Bauma with the California Professional Firefighters in support.
Thank you.
Jeanette Saripatin on behalf of the Mexican American Legal Defense and Educational Fund in strong support.
Thank you.
Lenny Goldberg, California Tax Reform Association in support.
Thank you. Any witnesses in opposition? Seeing none, any questions from our colleagues? Ms. Harkey?
One of my biggest issues is that if you were going to appeal, you'd have to really reconsider. I just, you know, a lot of times there's decisions made that aren't, that somebody feels are not right, not legal, and they appeal. I just think that this is works to the trial attorneys, but not necessarily, or the attorneys, but not necessarily to business interest. It also moves us out of conformity with federal tax.
Wait, let me say two things in response. First of all, and Congressman, our colleague is waiting, so very briefly, a business that chooses not to take, let's assume we change the law, and the public is no longer subsidizing despicable misconduct by businesses as it is now, because that's the status quo. You're paying for a business's despicable conduct. And so, if it were to be the case, we change the law, and a business is slapped with a punitive damages award and decides to appeal, all that would happen is there's a period of time pending the appeal in which they don't get the benefit of a public subsidy. And if the appeal is granted and the award is overturned, the award's overturned. The question, again, the status quo is that right now, every taxpayer in the state is paying for behavior. Here is the definition of what you have to achieve for punitive damages.
Excuse me, I understand, and you explained it very, very well. The problem is we're so litigious in California that, that's one of the top reasons that businesses don't like to do business with us is because we are. And so I understand where you're going, and I understand your case. You're an attorney, and this would be something that you would promote. But I do think that, whether something's despicable or not and ruled by a court and then it goes back and gets an appeal, we're in a really tough position here right now. So I appreciate that you want it. We're going to be here late. I don't think there's anything you can do to convince me that it would be a good idea to allow this to go through, but I do appreciate you speaking your piece and understand that, somebody convicted of something despicable should definitely not be subsidized. But there just seems to be so much in California that is despicable. Let me just end
and
on
colleagues,
that
if we can just keep our comments to the substance of the issue, that would be great. Thank you. Any other questions, comments? Seeing none, would you like to close?
I would, very briefly. Let me say, to be clear, in California, as in other states, in a trial, this doesn't help. This bill has no effect on lawyers one way or the other, except to the extent that a lawyer is pitching in for someone else's despicable conduct. Yeah, that's right. In California, if you are in a lawsuit and you lose, there is a stage. That is the stage at which liability is established. If you are alleged to have engaged in malicious, oppressive, or fraudulent conduct, and you meet a certain threshold, then there can be a punitive damages phase. It is a separate phase. Not every trial has this. In fact, very few trials have this component. When you go through that stage, that second stage, and a jury finds the conduct to have been so despicable beyond libel, this is a much higher threshold, that's when punitive damages are awarded, only after that second stage in the process. And all this bill says is when jurors have found that level of misconduct to occur, we undermine the purpose of imposing that second level of damages, and taxpayers end up subsidizing it if we allow the deduction. I urge an aye vote.
Great, thank you very much. This item will be referred to suspense, and we'll take it up hopefully soon.
Thank you very much,
All right,
Mr. Chair, colleagues, and Mr. Chesborough. Thank you again.
Thank you very much, Mr. Chesborough. We'll get back to you. Item number 10, AB 1428.
Thank you, Mr. Chair. It says good morning, Mr. Chair here. This is not morning. AB 1428 would allow individuals who suffered a disaster loss in the March tsunami that affected Del Norte and Mendocino counties.
Move the bill.
Got a motion and a second.
Oh, before we move it, I appreciate the support. Let me just say that we do want to amend the bill to only include Mendocino County, as Del Norte will automatically receive the same tax treatment now that it's been included in the presidential major disaster area declaration. So with that amendment, I would simply urge your aye vote unless there's any questions about the bill.
Great. Do we have any witnesses in support?
It's a long ways from Del Norte County.
Any in opposition? Seeing none, we have a motion and a second. Do pass. Will you please call the roll?
The motion is due pass as amended to appropriations. Perea?
Aye.
Perea, aye. Donnelly?
Aye.
Donnelly, aye. Bell? Bell, aye. Calderon? Cedillo? Fuentes? Gordon? Gordon, aye. Harkey? Harkey, aye. Nistande? Nistande, aye. That bill is out.
Bill is out.
Calderon, aye.
Thank you very much.
Thank you, Mr. Chair, and the people of Mendocino County appreciate the legislature's support.
Thank you. Okay, we have our last bill to hear. Assemblymember Fuentes, and we're waiting for him to come. In the meantime, I just want to make a quick announcement that Assemblymember Morell is waiving presentation on item number 1, AB 368, which is going straight to suspense. Is there any support or opposition for that here today? Do you feel the need to testify? Great, thank you. Okay, we were just waiting on our last author, and Mr. Fuentes, and then we can go to suspense. Okay. Tax credit, movie. Okay, do you have the list?
I'll present and I'll move the bill.
Would you like to sing my testimony, Mr. Calderon?
Okay, Mr. Fuentes, you're
Thank you, Mr. Chair, members. This bill extends the California Film and Television Tax Credit Program, which was enacted in 2009 as part of a targeted effort to create jobs while increasing production spending and tax revenues for California for 5 years through the fiscal year 2018 and 19. The existing program provides tax credits beginning in tax year 2011 to eligible film and TV productions that meet the program's criteria. The program specifically targets productions that are the most likely to leave the state due to incentives being offered in other states and countries. It is due to expire in fiscal year 2013-14 and is essential that it be extended during this session of the legislature. The last credits will be allocated by July of 2012. By any measure, the program so far has been a tremendous success and should be extended. It has attracted its target group of productions, basic cable TV series, mid-sized feature films, and TV movies, to stay here by enabling California to be competitive and to keep many of those at-risk films in the state. So far, $300 million in tax credits has been allocated to eligible film and television productions. This has resulted in a $2.2 billion investment in California in direct production spending in the state. $728 million of that amount was spent on wages for an estimated 25,700 below-the-line crew and 6,100 cast members. In addition, approximately 172,000 individuals are also estimated to have received daily employment as background extras. Finally, and probably the greatest testament to the program's success, every year it has been oversubscribed, which means that more productions applied for the credit than credits were available. Today, over 40 U.S. states and many cities and even countries offer substantial financial incentives to the film industry and have been successful at luring production and post-production jobs and spending away from California. What we hear so often from the film industry is that they want to film here in California, but financially it just doesn't make sense. What we're doing with this bill is retaining and creating jobs by leveling the playing field and making California competitive again. With the state's unemployment hovering around 12%, this incentive is essential. We need this incentive to help keep hundreds of thousands of Californians employed. With that, I do have witnesses in support, Mr. Chair and members, and I will yield my time to them now.
Hi, I'm Amy Lemish. I'm the director of the California Film Commission, which is a department under the Business, Transportation, and Housing Agency. Most of the committee members heard my full report on the program last month, so I'm here to answer any technical questions, and I think I should defer my time to the producer that I flew up from Los Angeles with, who participated. His television series participated in the tax credit program.
Thank you. Next witness in support.
Thank you, Chairperson and members of this committee, for hearing me. My name is Donald Kurt, and I'm an independent producer and director, and a member of the GGA and the WGA. I have produced and directed over 300 hours of television and features. Over the past 25 years, I've worked in 13 states and, unfortunately, 3 countries. The majority of my work has been out of the state of California, and basically because a lot of it has to do with tax incentives in other states. I worked for Sony Pictures, and in 2009 I was hired to produce a pilot by Elmore Leonard. It was called Justified for Sony Television, and they sent me to Pittsburgh, Pennsylvania to produce the pilot. In May 2009, the pilot was picked up, and Sony wanted me to go back to Pennsylvania or Orlando to do the series. I had heard about the tax incentive. I think it was talked about, and it was in February, and we were discussing it. And I convinced Sony during a production meeting about the idea of producing the show in Los Angeles. After much resistance, I convinced Sony and FX that I could deliver the show in Los Angeles for the same budget as it would be in other states with tax incentives. Why? Because of California's tax incentive. Sony and FX acquiesced, and in 2009, we started shooting Justified in Los Angeles, California. How happy was I working in town and sleeping in my own bed? Thank you, California. During the last 2 seasons of Justified, Sony Pictures and FX have spent over $82 million in the state of California. Justified has employed over 1,325 crew members for the last 2 years, all union employees contributing to their pension, health, and welfare plans. We've spent over $24 million in payroll. There have been over 3,400 man days for extras. Vendors in Los Angeles have benefited from this production: restaurants, dry cleaners, prop houses, gas stations, hardware store, and many, many more. Over 40 states and countries offer tax incentives. More and more are being added every month. Filmmaking is a business for corporations. They will go where they can get the best deal, and that's the bottom line. California has over 4 generations of talented craftspeople. No state in this country and in the world has the depth and experience of this talent pool of Hollywood. Why do other states offer tax incentives for the movie industry? Why? Because they know it brings revenue to the state, and people love the entertainment business. Why? Because they know it makes money. Without California incentive, Hollywood is in danger of losing an industry that is a signature of California. Hollywood is what the auto industry is to Detroit. Let's not risk losing something that has been built over the last 100 years. I support this bill to extend the tax credit for an additional 5 years and would urge the members of this committee to vote yes. And oh, by the way, Justified has been renewed for a 3rd season, so I get to sleep in my own bed, and 1,300 Californians get to work and contribute to the economy. Excuse me? Been renewed for how many seasons? This is the 3rd season now.
Great, thank you very much. Just want to remind the witnesses that this measure does enjoy support from both the Democrats and Republicans. So, next witness in support.
President Dooner, IATSC Local 871. I'm just here to voice the support of the working men and women behind the scenes for passage of this bill.
Thank you.
Tim Lynch on behalf of the Screen Actors Guild and 70,000 members in California supporting the bill.
Terry Thomas on behalf of the Motion Picture Association of America in support, and Greg Hines from the California Manufacturers and Technology Association also wanted me to indicate to you they also support the bill. Thanks.
Shane Gussman on behalf of the Teamsters in support of the bill.
We'll do it next.
Sarah Flox on behalf of the California Labor Federation in support of the bill.
Thank you.
Gene Urban on behalf of the Directors Guild of America, supporting the bill. Thank you.
Thank you. Any witnesses in opposition? Seeing none, any questions from our colleagues? Mr. Fuentes, would you like to close?
Thank you for your indulgence. Urge and I vote.
Thank you very much. This item will be referred to suspense, which will be taken up next.
Fantastic.
Thank you. Thank you very much.
Happy to take co-authors with Harkey.
Okay, so announcement prior to taking up suspense, very briefly here. Amendments have been handed out to members of this committee relating to various bills already on suspense, and I'll be reading those amendments as we go through them. So for suspense, we have concluded our regular order of business and will now proceed to vote on those bills that are on the Revenue and Taxation Committee suspense. The suspense list is being handed out, or has been handed out, I believe. Does everybody have that list? So we will go ahead and go down that list today. We will begin with number 1, AB 368. Oh, sure. Okay, you guys ready? Okay, great. Item number 1, AB 368. The chair's recommendation on that is to hold. Number 2, AB.
I offer a substitute motion to move the bill out.
Okay, we have a substitute motion to move the bill out. Is there a second? So the chair's recommendation is to hold on suspense. So I would ask for no vote on the substitute motion. Please call the roll.
Perea?
No.
Perea, no. Donnelly?
Aye.
Donnelly, aye. Bell? No. Bell, no. Calderon? Calderon, no. Cedillo? Fuentes? No. Fuentes, no. Gordon? No. Gordon, no. Harkey? Harkey, aye. Nestande? Nestande, aye.
Great, thank you. Next, we will move on to number 2, AB 856, regarding mortgages. My recommendation is to hold.
I offer a substitute motion to move the bill out.
Okay, there is a substitute motion. Is there a second?
Chairman, can we just do B roll call? Would that be sufficient, or do you want to? Is that
Yeah.
okay?
So let's
just
go
do
to,
B roll call on.
Let's go ahead and do
this.
a B roll call on this. Good call. Thank you. AB 895. In regard to credit on physicians, the recommendation is hold. There is a substitute motion. We'll do a B roll call. Thank you very much. I've been asked or been corrected. That is a C roll call. No, you like it. C means you like it. Okay, move on to item number 4, AB 1069. That bill is out on a roll call.
I need one motion.
Oh, I'm sorry. We do need one motion and a second on that. We have a motion and a second. That bill is out on a roll call.
And we'll substitute that motion and second for the remainder of the bills.
And we will substitute. Say that again.
You'll substitute the motion and the second for any remaining.
Substitute the motion and the second for any remaining bills
that
come off suspense. AB 1130, personal income tax rates. That bill is out on a B roll call. Item number 6, AB 1190, from Assemblymember Jeffries. The recommendation is to hold that in committee. We have a substitute motion, and is there a second? Second. C roll call on that. Item number 7, AB 1239, by Assemblymember Fioritani. We will ask for a roll call vote on that. Item number 7.
The motion is due pass.
Motion is due pass.
The motion is due pass to appropriations. Perea?
Aye.
Perea, aye. Donnelly?
No.
Donnelly, no. Bell? Bell, aye. Calderon? Calderon, aye. Cedillo? Fuentes? Fuentes, aye. Gordon? Gordon?
I'm going to vote aye because I wanted to have the conversation on this and Ms. Skinner's bill continued, but this particular bill does create some problems for me, and I wouldn't be able to vote for it on the floor.
Gordon, aye. Harkey? Harkey, no. Nestande? Nestande, no. That bill is out.
Thank you. Next, number 8, AB 1276. The action is due pass, and that is out on a B roll call. Item number 9, AB 1326. Recommendation is to hold. Do you guys have a substitute motion on that one? No? Okay. All right. Just checking. Item number 11, AB 11. The recommendation is to hold. Okay, item number 12, AB 81. The recommendation is due pass as amended. We do have a couple of amendments. We have 3. Number 1, conform bill's definition of an air common carrier to BOE regulations. Number 2, eliminate provisions allowing local governments to opt in to the exemption. And number 3, provide for the exemption's repeal on January 1st, 2017, unless the LAO's office, in cooperation with the Employment Development Department, issues a report finding that the exemption has resulted in a net increase of 2,000 airline industry jobs over the course of the exemption. We are asking for a roll call vote on this one.
Motion is due pass as amended to appropriations. Perea.
Aye.
Perea, aye. Donnelly.
Aye.
Donnelly, aye. Bell. Bell, aye. Calderon. Calderon, aye. Cedillo. Fuentes. Fuentes, aye. Gordon. Gordon, no. Harkey. Harkey, aye. Nestande. Nestande, aye. That bill is.
Bill is out. Thank you. Item number 13, AB 166. Recommendation is to hold. Substitute motion. There's a second. We will call a C roll call on that one. Item number 14, AB 192. Recommendation is to hold. Substitute motion. Is there a second? Second. We will call a C roll call on that one as well. AB 204, the recommendation is due pass as amended. We do have a few amendments to read into the record. Number 1, specify the equipment eligible for the exemption. 2, impose a 5-year sunset. 3, require that the qualifying facility be primarily engaged in the qualifying activities. And 4, include a standard recapture provision. And that bill is out on an A roll call. Item number 16, AB 205, recommendation is to hold. Substitute motion in a second. We will have a C roll call on that. Item number 17, AB 218, action is due pass, and that is out on a B roll call. Item number 18, AB 236, recommendation is to hold. Item number 19, AB 279, recommendation is to hold. Substitute motion. Is there a second? There is a second, and we will call a C roll call on that. Item number 20, AB 289, the recommendation is due pass as amended, and there is one item we need to read into the record, and that is to due pass as amended to extend the sunset date 7 years. That is out on an A roll call. Item number 21, AB 303. The recommendation is due pass as amended, and that is out on an A roll call. Oh, sorry, we're okay? Do I need to read these amendments? We're okay? Okay, we're okay. Okay, next, item number 22, AB 304. The recommendation is to hold. Substitute motion. Is there a second? There's a second. We'll call a C roll call on that. Item number 23, AB 558. Recommendation is due pass as amended. That is out on an A roll call. Item number 24, AB 703. Recommendation is due pass as amended. We do have one item I need to read into the record. It's due pass as amended to include a 10-year sunset date, and that is a roll call vote.
Motion is due pass as amended to appropriations. Perea.
Aye.
Perea, aye. Donnelly. Donnelly not voting. Bell. Aye. Bell, aye. Calderon. Aye. Calderon, aye. Cedillo. Fuentes. Aye. Fuentes, aye. Gordon. Aye. Gordon, aye. Harkey. Aye. Harkey, aye. Nestande. Aye. Nestande, aye.
Great. Bill is out. Number 25, AB 726. Recommendation is to hold. Substitute motion in a second. We will call a C roll call on that. Number 26, AB 821. Recommendation is to hold. Substitute motion in second. We will call a C roll call. Item number 27, AB 854. Recommendation is to hold. Substitute motion second. C roll call. Number 28, AB 865. Recommendation is due pass as amended. Would you like a substitute motion? I'll second that. Isn't that what I said? Yeah. Well, you almost jumped out of your chair there, Brian. The recommendation is due pass. I'm sorry, due pass, and that is out on a roll call. Does that go to appropriations? I believe it. Yes. I believe it does. I believe it does. We'll talk about that one later, Mr. Item number 29, AB 979. Recommendation is to hold. We got a substitute and a second. We'll do a C roll call. Number 30, AB 1007, that is due pass as amended. And need to read into the record the two amendments. One is to incorporate amendments distributed to the committee and to add myself as a joint author. And that is out on an A roll call. Number 31, AB 1009, the recommendation is to hold. Item number 32, AB 1057, recommendation is to hold. We got a substitute and a second. We will call a C roll call. Okay, a few more to go here. Item number 33, AB 1195, recommendation is due pass as amended, and those amendments are expand the hiring credits definition to a qualified employer to include taxpayers with up to 50 employees. Delete all other modifications to the small business hiring credit. Add myself as a joint author and add Assembly members Portantino, Swanson, and Wykowski as co-authors. And Harkey. You got it. And that bill is out on an A roll call. Number 34, AB 1240, recommendation is to hold. We got a substitute and a second. We will call a C roll call. Item number 35, AB 1339. That recommendation is due pass as amended. Those amendments are add Assemblymember Chesborough as a joint author. Explicitly provide that vertically integrated oil companies shall not be eligible for the credit by limiting the credit to companies with worldwide gross receipts under a specified amount and cap the credit amount at $2,500 per generator. And that is out on an A roll call. Item 36, AB 1369. The recommendation is due pass as amended, and we will be asking for a roll call vote. $1369, this is the denial of deductions for illegal activity. So if you commit a crime, you can't write off your expenses. Well, we're asking for a roll call vote.
The motion is due pass as amended to appropriations. Perea?
Aye.
Perea, aye. Donnelly?
Aye.
Donnelly, aye. Bell? Bell, aye. Calderon? Calderon, aye. Cedillo? Fuentes? Fuentes, aye. Gordon? Gordon, aye. Harkey? Harkey, aye. Nestande? Nestande, aye.
Wow. We could have did an A roll call. Sure. Duly noted. I would like to be on Mr. Fuentes' bill as co-authors. Okay. I don't know. Is that okay, Mr. Fuentes? You got it. All right. All right. Last item for suspense, number 37, AB 1376. We'll do a substitute roll call. There's a motion and a second. We will call a C roll call on that.
Just for clarification, those first two items, where did that go?
It should be C roll call.
Item 2,
B roll call on the first two items. Just clarify.
Hold on. Say it. Somebody, one person say it. Just for clarification on items number 2 and 3, that was a C roll call. All right. All right, colleagues, I want to thank you for your patience. Thank you for all of your hard work. The meeting of Rev and Tax is adjourned.